So is the United Kingdom a reliable store of value, just like gold, bonds, private equity, or cryptocurrency, for example? In my opinion, yes, it is. The United Kingdom's property market can be used as a hedge, can be used as an alternative investment strategy, can be used and seen as a low risk diversification tool when you're looking at your estates. When considering the United Kingdom's property market to gold, for example, there's a few things to consider. So with gold, of course, it's very liquid. You can purchase it quite quickly. You've got a fungible asset and something that's there. Real estate is also the same. It's less liquid, but you've got much more control on what you do with that asset once you hold it. With gold, although it's a good bet and it is always going to go up in value, you can't control the economy. It could come down, it could go up. You don't know what's going to happen. It's the same with real estate. It can go up, it can go down. You don't know what's going to happen. But you can actually control the asset's growth. For example, if you need to increase the value of the asset, you can do some improvements. You could add another floor, i.e. by going into a loft, for example, and doing a conversion. You could go with a single story rear extension, and that's something you can completely do under permitted development rights, meaning that you don't actually need to go through entire planning permission to make that gain. You could do a renovation. You could improve the kitchen, bathroom, for example. Maybe you could convert a study room into a bedroom. You can do things to add the value by actually just being creative and doing some renovations. There's also other things to consider when comparing against gold, for example, that you don't need to really pay for any holding costs. Although with leasehold property, you've got to pay ground rents and service charges. When we're considering freehold, you've not got any of those reoccurring expenses to pay for. You will have to pay for, obviously, maintenance. You'll have to pay for insurances. You'll have to pay for council tax and things like that, which are just a given. But with real estate, you've got something that's a safe bet, that is secure, that's fungible, that's safe, and is always going to go up in value, even if there is some economic downturns and the values decrease. When considering long-term appreciation and long-term growth, you're always going to see an increase with property. Now, there is an argument to say that gold has historically performed better than real estate, which, yes, you can say that. It really depends on what it is that you're looking to invest into, the reasons why, and if it fits your risk profile. Now, the positioning that I'm coming from in terms of these opinions is that real estate is something that's there for you to diversify, but it's also got other benefits. So if you was to use the property as a holiday let, for example, you've got the access to that property. So if you decided that you want to come to the United Kingdom and you want to spend some time here, the holiday let strategy, you've got a place that you can go to, but you've also got the benefit of generating additional cash flow. And although that cash flow might be fairly turbulent, you're going to generate good returns, like really good returns. Now, another thing that people might say is, I'm going to look at bonds or stocks or shares. Now, although that investing in government bonds could be a smart move, it's fairly safe. It's always going to get you the returns that you're expecting. It's not quite as good as the returns that you can get with property. People generally forget that with property, you've got two forms of wealth generation. First being the income that you can generate from either running the property as a holiday let or by having the property tenanted for the long-term period, which is one form of income. But you've also got the capital growth of the property. Now, what I'm recommending, and I'm not providing any financial advice, my recommendation is that people look at property investment for the asset itself and purchase a property based on that asset, and knowing that there's going to be an appreciation of that asset over time because the area is in a great location, there's not a lot of crime, there's not much deprivation, and it's a desirable location where you own the freehold. And then the additional benefit is that you can cash flow it. If you wanted to have a long-term tenant in there, you can. If you wanted to run it as a holiday let, you can. And if you wanted to keep it empty, you can, but you're probably going to need to pay a little bit more in council tax. So yes, although government bonds are safer and you might decide that you want to just put it with the government, it's there, but there's other low risk strategies that you can consider where you are going to multiply your returns. Now, another thing that people generally say is that if you have a property, it's going to need to be managed. And absolutely it is. And I 100% appreciate that it's very, very difficult to find people to trust. There's a lot of companies out there that, especially when dealing with buy-to-lets and properties where you have a long-term tenant, you have issues that arise over time. You have problems that aren't made aware of from the tenants that live there. Property inspections aren't carried out as frequently as they should be. The properties end up actually eroding over a period of time physically, which means that they need repairs. And if you're doing a buy-to-let and you're making £200 or £300 a month profit, you're going to have a tenant for maybe 12 months, change the tenant over, and you might need to do a lick of paint, change some carpets, some minor appliance improvements, things like that, which is going to eat away at those profits, meaning that you're only actually left with the appreciation of the asset, which in undesirable locations where crime is higher and there is a bit of deprivation, you're not actually going to see that much gains. So although the selling point of the UK is that real estate increases in value, it doubles in value every 10 years, that's only really in some specific locations. It's really important to consider this when making decisions on what to invest in. Again, I'm not here as a financial advisor, I'm just here to share my opinions and to talk a little bit about my experiences and how I can help people. What I've learned with working with professional management companies is that if you have a long-term tenant, they do regular inspections, they do thorough due diligence on things that can deteriorate over a longer period of time. And also with the holiday let business, having a company that really takes pride in what they do, that works with guests when they stay there, that does regular inspections in between, that works with a team of cleaners that actually do correct checks when they're cleaning the property and they maintain it to a very, very high standard. Another thing to consider with holiday lets as well, it actually mitigates all of the renters' reform rights that are coming into place, because you don't actually have a tenant that stays in the property, it's a guest. It's technically a guest. Even if they stay in there for a medium to long-term period of time, the person is technically classed as a guest, meaning that they don't actually have any tenant's rights. And if for whatever reason they stopped paying, they have no rights to stay in that property. They don't claim squatters' rights because there's a contract, and essentially they can leave at any time.